Hello, everyone. It is Sunday, December 12th, and this is episode 41 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look at what happened last week. So last week was definitely a positive note for the market. We looked at this last week, and we honestly said, hey, there's a very good possibility we're going to have a bounce up because we had stretched that lower end of the Bollinger Band so much in the week prior that we were looking at having that magnet effect of the red midline pull us back up towards it. And then the question was going to be, if we did get to that midline, which means we would reach that upper breach point, 46.37, will the red midline become support? And based on what happened last week and looking at this chart, it sure does look like it's now support for the market. Now, could it go back down? Of course, we're always operating under assumptions that what has happened historically is not a prediction of what will happen, but is enough to inform our forecast and inform what we believe is possible. So let's phrase it that way. It is very possible that we will stay above this midline because historically that is the tendency. The market did actually close outside of the expected settlement limit, so there you go. That forecast did not come true, but that one typically has a 79 point something percent chance of being true. So 20, point something percent chance that it will not close within the expected settlement limit. And I do try to reiterate that every time we put these numbers out there. The odds of the breach, right, we're at 81.31, I believe, and we did have the breach. So, you kind of take the good with the bad in that. The market is not even close to the lower end of the breach point, lower settlement limit, or the parabolic SAR, so we can kind of just ignore those three bottom ones there. But notice that we are now in that channel above the red midline and below the upper Bollinger Band range. All right, let's take a look at the moving averages now. So because of that strong upward movement, the short-term moving average has now flipped back to neutral from bearish last week, and the medium term did not turn neutral. Instead, it remained bullish. And again, that's attributed to the fact that we had a very strong upward price action last week. Long-term moving average, no surprise there, is still bullish. All right, let's take a look at what we're forecasting for next week. So we're looking at an 81.32% chance that we're going to breach the 45.86 and the 47.67, or the 47.67. So those are the two breach points to the downside and top side. But take a look at how close we are to the settlement limits. So the expected settlement range, right, between 45.74 and 47.86, we're pretty close there. The breach points are very close to those the edges of that range, and what that tells me is that this setup is a good candidate for a situation where we will not have a breach of the breach points. So again, 81.32% is not 100%. That means that we still have like an 18.7% chance that we will close and not have a breach by the end of the week. And looking at this setup, that's a very good possibility. Just because it's so wide out there, it reduces the chances that we will have the breach and stay within the expected settlement range. So just kind of throwing that out there. And then the 43.61 is the updated parabolic SAR, which is still very far out of reach, not looking to close below that point. All right, let's put it all together into the relative view. So you can see that for next week, we are closer to that 47.67, but again, I don't think we're going to cross that. That's really close to that upper Bollinger Band range and requires a few new all-time highs to get to it. My money's on not breaching one of the breach points this week. The red midline, if it acts as support now, will kind of put a pause there right towards the middle of the Bollinger Band range, which is also close to the middle of the range of all of our forecasted critical points there. And then the 43.61, again, way out in no man's land. All right, if you didn't see that one coming. So two things. Last week we said, do not be surprised if we turn back around and have a sharp V up towards that midline and breach it. And that's exactly what happened. So hopefully none of you were surprised by that. And then for next week, don't be surprised that the midline now acts as support and that we stay above it. Also, don't be surprised if the market stays within the breach points and does not break out of them. So can't say you don't see that one coming. And now we're going to wrap up with the quote of the week, which is by Mr. Ray Dalio, who he is a hedge fund manager, author, philanthropist, The list goes on and on. Look him up. Very interesting character. A lot of good content out there about him and from him. So Mr. Dalio says that in trading, you have to be defensive and aggressive at the same time. If you're not aggressive, you're not going to make money. And if you're not defensive, you're not going to keep the money. Now, I love this one because it shows that you can't have either of the extremes, right? You can't be super, super aggressive and expect not to blow up your account. And then you also can't be super, super defensive and expect to make any profit, right? Because you have to be able to take risk. The market is designed in such a way where risk premium, right? So when you're taking on risk, that's where the reward is. If you don't take the risk, you get no reward. And it's so important to remember this because if you go into the market, you have to find that balance that works for you. You can't be at either extreme. And if people remember this, it helps to frame things, when you have a situation where you have a big loss or when you have a big gain. Remember that every big winner you took, that you got, right, came as a result of some risk that you took. Nothing is handed out for free in this market. So take this to heart, and hopefully you guys will be able to see how this quote plays a role in your life and your trading style. But I'll leave it at that. Hope you guys have a great rest of the week as we get closer to the holidays here. Hopefully you've got your Christmas shopping done, and I look forward to seeing you guys next Sunday.